Hi and welcome back. I'm Monique from Monique Property, and today I'm here with George from Connected Finance. In our last video, we talked about how first home buyers can get into the market, and with that becomes, I suppose, an expense sometimes if they're borrowing up to 95% of the money, and it's called lender's mortgage insurance. George, what is lender's mortgage insurance, and tell us a little bit about it.
Okay, so lender's mortgage insurance. So typically a bank will lend up to 80% of what a property's worth. So that means a client's making a 20% contribution plus costs. So obviously not everyone has 20%. So the bank can lend over 80%, but when the bank lends over 80%, you incur what's called lender's mortgage insurance. Now, just to make something clear, lender's mortgage insurance is actually there to protect the bank, not actually the customer. However, the customer pays for it. Because you're borrowing over 80%, the bank deems the transaction a bit more of a riskier transaction and takes out this mortgage insurance to obviously protect themselves. And there is a cost for lender's mortgage insurance, and that cost sometimes can be relatively cheap, but sometimes it can be expensive. So it really just depends on how much you're borrowing. So for example, you might be borrowing up to 85% of what the property is worth, and you still have a sizable deposit, but sometimes you might have a small deposit and you're borrowing up to 95% of what the property is worth. So obviously we can work that out for you, but the biggest thing is, I've had a lot of feedback from customers, and the feedback's around, yes, there's a cost involved, but clients are seeing that cost as an opportunity cost. And what I mean by that is, by paying that relevant mortgage insurance premium, they have the opportunity to enter into the property market right now, as opposed to continuing to save and obviously waiting a further period. And the other important thing to note with regards to lender's mortgage insurance is, even though it's a premium you have to pay, you don't pay for it up front. It actually gets added to your loan. So even though it can be expensive, because it's added to your loan over a 30-year period, it doesn't make a huge difference to your monthly repayment. So it's still definitely affordable. So therefore, again, it's an opportunity cost for you to get into the property market sooner rather than later, as opposed to continuing to save for a number of years. Of course, everyone's circumstances are very different. So I encourage you to reach out and we can talk about your particular needs.
Absolutely. Look forward to seeing you in the next video.